thousands of Irish farmers protesting. Farmers stormed Paris with tractors to oppose EU-Mercosur free trade deal. Farmers protested Ostend Airport over said deal. Trade deals do not usually move markets overnight. They work quietly in the background, changing where the money flows over years. And today, I want to explain the EU-Mercosur trade deal. What is it exactly? What are the numbers behind it? And which stock will benefit the most? We won't talk about politics nor hype, just economics and markets. But it's worth noting that this agreement doesn't confront China or the USA directly, but it definitely reshapes trade by creating alternatives outside of those two dominant blocks. And what is the deal? The trade agreement that will be signed is a free trade deal between the EU and Mercosur bloc, which includes Brazil, Argentina, Uruguay and Paraguay. Believe it or not, Venezuela was also a part of it, but it dropped off in around 2017. These countries in total connect around 700 million people with a combined GDP of 18 trillion euros. So, as you can imagine, this makes it one of the largest trade agreements that the EU has ever negotiated. Which is funny because it took them 25 years to do so. It's a simple deal though. It basically says that 90% of the tariffs on goods traded between these regions are removed or will be reduced over time. Key thing, not overnight. What about the key numbers? What really matters here? And the numbers that matter really, at least for the EU side, is that the EU exported around 55 billion euros worth of products in 24 and paid more than 4 billion euros and are still paying at least that per annum in tariff costs alone when selling to these countries at least. And over time, with this deal, a large portion of that cost will disappear. So, contrary to popular belief, this does not mean that companies will automatically see huge profits and growth in volumes or products sold. It basically means that profit margins will be higher because pricing power of these exporters will be improved. From the Mercosur side, the main gains that we can observe are in the agriculture sector, such as beef, poultry, sugar, ethanol, soy, and so on. Rare earth is also a big thing, but I'm not exactly sure which companies in the EU will benefit from that because these rare earth minerals aren't really rare. It's just very expensive to process them, so that's why nobody wants to do it. But who benefits really? The main beneficiaries on the EU side, as the EU is very export heavy, we're looking at industrial systems, pharmaceuticals, automotive. So basically you've got Siemens, Novo Nordisk, what else? BASF for chemicals, Volkswagen. They will benefit tremendously. And not just them. All of their comparative businesses will do really well. So we're looking at, for example, Mercedes in the automotive industry, and there are a few large Polish producers for chemicals as well. These companies don't really need explosive demand growth because they have a very tight supply chains. After COVID especially, they really tightened their supply chains because we saw companies then having massive amounts of inventory that only incurred cost. So they won't benefit from the demand because they cannot manufacture from tomorrow, let's say, an additional 20% output out of the blue. But with 0% tariffs on them, their pricing power suddenly increases. Because, and well, this will also drive obviously profit margins, but the pricing power will give them leverage over other producers, for example, from China or the USA, Canada, and so on. And on the Mercosur side, these large agricultural exporters, they benefit mostly, as well as the rare earth minerals as mentioned, but their returns are still heavily influenced by currency exchange fluctuations, as well as domestic politics. And as we saw, for example, EU farmers were very, very loud opponents of this deal. And politically, it mattered. It's all over the news. You've got different politicians saying it's the end of EU food supply chain, at least internally. But from a market perspective, agriculture is a relatively small part of the EU equity side. So this is a very good example, actually, of where political noise and market impact are definitely not the same thing. So, in closing, I would summarize this whole deal as one that will not move the markets next week, month, or a year for that matter. It will rather reshape the way that cash flow flows over the next decade. And these are the kind of changes that they compound in the background while some investors focus on headlines. So understanding that trade is really about understanding where profits flow when no one is watching is where you get the extra gains.